What's up guys, Bill here. In this video, we're going to talk about Oliver Kell's cycles of price action. Oliver's a US investing champ. If you're unfamiliar with him, he's on Twitter. I put his username in the description. Go ahead and give him a follow. This is something he created to identify changes in trends or reversals in price and things like this, and give us a good risk-reward entry without having to try to time tops and bottoms and things like that. And I found it very useful, especially a couple months ago. A lot of stocks started demonstrating these patterns before the big run up into the end of the year. So we're going to look at examples of this. And here's a diagram of it, just a general diagram. It's essentially 4 phases. An exhaustion extension or reversal extension. It just depends on whether the stock is coming from an uptrend or downtrend. Then a wedge drop or pop, an EMA crossback, and a base and break. And we're going to want to be entering in the base part of the base and break in stage 4. And that phase can repeat over and over again, depending on how long the trend continues, how strong it is. So I'm going to show you an example on an actual chart with a stock of these steps and how you can start to look for them on your charts to identify changes in trend. All right. We have Boeing pulled up here. Boeing is a nice example of a trend up that trend down that exhibits a reversal and a trend up that exhibits an exhaustion. So let's dive right in here. We can see that Boeing is trending down, obviously. And first we need to be looking for that reversal extension. So where I see it is on this earnings day, right? We get this big candle down and it's on volume. And on these exhaustion or reversal extension candles, it's best if they're backed by volume. So earnings supplied this volume and then price starts to curl up, right? So the next thing that we're looking for, obviously, right? Refer back to the diagram here. We've got our extension. Now we need to see a wedge pop because we are looking for a stock that's bottoming and starting to trend up. So we need to see a wedge pop, right? So where's our wedge pop? Well, how about this? Here's our wedge pop, right? Okay. Next step is the EMA crossback. He uses the 9 and 20 EMAs, all right, on the daily here. So we get the wedge pop and then we get the EMA crossback. Okay. Now we're looking, we got the crossback. Now we're looking for the base and break. Like I said earlier, we want to get in on the base, right? The base is going to usually be on lower volume than the extensions and the pops and all these types of things. And it's going to be consolidation coming back in to the EMAs. So here we see this pullback on low volume, some even almost like an inside day doji candle here right at the EMAs. This is ideally where you want to get in. Okay. And there's another couple days of, it's a little bit of it's moving up, right? But it's kind of basing here. And then you get another break, right? Whether you want to draw it like that or just like a flatter line, we get that gap, right? And now we're off and running. Here's another kind of base and break, pulls back, but see, it's always on low volume. You get this nice gap again, gaps defended on volume, more kind of base. Again here, base and break, breaking on volume after low volume base. And you can see that Boeing just kicks off a great trend, right? And it just respects the 9 the whole way. And there's more basing and another breakout and more basing and another breakout. And ideally, you know, we're back when we first notice the crossback and we get our base, we're in here. And on these big gaps and these strong, impulsive candles, if we're swing traders, we're taking profits, right? We're taking on all these big pops, taking profits. And we get all the way to the top of the trend. Now, what's happening here at the top of the trend? Another big volume candle. Here's your exhaustion extension. Now, we don't know the day it happens that this is the exhaustion extension, right? Maybe that was the exhaustion extension. But what we do know is there's more parts of this process that have to happen before we start to say, okay, we look back and we say that was the exhaustion extension. So what are we looking for again now? Okay, now we want a downtrend. Here's our exhaustion extension. We need to see a wedge drop. Well, after a bunch of days of consolidation, which could have just been more base and break higher, but we don't get that. We get wedge drop. Okay? Now what are we looking for? We're looking for the EMA crossback. Here's the crossback. Here's your base. Now this process was a little hurried here because of the context of the stock had bad news and it dropped on bad news. But this is exactly what you want to start seeing. You're basing, you get the crossback, you're in on the base, and then you get, the news aided flush. But this is exactly the same process, right? So that's really it. It's very simple, but the fact that there's multiple things that have to happen in sequence to show the potential for this reversal, it's really solid analysis, and you got to check all these boxes, right? And then you can have high conviction that, okay, this is actually going to be a great entry for a potential reversal. Instead of trying to nail the absolute bottom, like you don't have to be in down here, right? It's just fine to be in here. Look at the move that you get. And of course, you're not always going to get perfect, great trends like this every time there's a reversal. And there's going to be fake outs like anything else. There's going to be times where you get a wedge drop. You get a little bit of a base, but maybe and you get a crossback, but then it just recovers. And we saw this a little bit on some names last week. We almost saw it on SPY, but SPY never got the crossback. So let's look at SPY. This is what I was watching because I've been, bullish on SPY for a few months now, and I'm expecting all-time highs. But once we got a little, things got a little dicey there for a second, and we got this wedge drop. And we got down below the EMAs, but look, the EMAs never crossed. And the reason I was a little iffy on this whole thing, and I needed to see a little bit more, was we never really got the exhaustion extension candle either. I mean, that's not a great looking candle and it's on volume, but it's not really, an extension, right? We never really got it. Maybe you could argue this one was nice, but then we just based higher. We just kept trending higher and holding the EMAs. So hopefully this process makes sense, guys. It's really something that I'm starting to use a lot, especially for swings. It's definitely better for swings than day trades, right? I mean, you can scalp like base and breaks maybe off the EMAs and stuff like that. But it's definitely more suited for, holding a little bit longer time. And I think Oliver pretty much just plays commons. But I use it with options, buying, 3-4 months of time, and you get in the entries like that. But hopefully it helps. You guys, if you have any questions about it, just leave a comment or find me on Twitter and I'll help you out.